The just released minutes from the Fed's last meeting show a deeply divided central bank with a tight split voting in favor of a rate cut. Here now with fresh reaction, former Federal Reserve Governor and Columbia University Professor of Economics, Frederic Mishkin. Professor Mishkin, so I guess maybe no surprise we have a bit of a split committee, some disagreement. Is this just the natural outgrowth of, rates being not too far from neutral and being far of the mark on either mandate target? Or is there something else about the kind of obstinance of one side or the other?
No, I think it's very reasonable at this point to have a split. I mean, I would tend to be on the hawkish side. I mean, because of the fact that inflation is still above the Fed's target, and it's really slowed down its progress getting towards the target. But also the labor market's been weakening a little bit, but the economy's still pretty solid. So when you put all those things together, it's sort of a 50-50 type deal. I would sort of lean to not cutting rates. Probably might not have even wanted to cut rates at the last meeting because I'm a little bit more hawkish. I think the inflation concerns are serious, and I don't see the progress that we should have. But on the other hand, if the economy could weaken a lot more, which is a real possibility, then in fact you would need to cut rates. So this is showing a committee that's actually responsible in thinking hard about the problem, and that it's not a slam dunk either way.
Does that also mean, I know this maybe is counterintuitive, but does it also mean that the stakes are relatively low? In other words, if they wait another meeting or if they do decide to cut, if you're that kind of close and it's give or take either way, I just wonder if the risks of the next move are not that great.
I don't know if the stakes are always there. I think that one of the big issues, however, is that the independence of the Federal Reserve is certainly very much in question right now for very obvious reasons because of the Trump administration's attitude towards the Fed and the fact that we're going to get a new chair not too far in the distant future. And that's where the stakes really are very high. Mm-hmm. So, you always have an issue whether you move 25 this meeting or that meeting, you can always fix it. And in fact, the Fed frequently has. Indeed, one of the things that's actually unique about this Fed, which I like to call the Powell Doctrine, is that they'll actually move very fast and sort of admit they made a mistake. So there have been cases where they didn't move and then they said, oh, we got to move 50 basis points. That's actually very unusual in terms of recent Fed history. And I think it's a good thing, not a bad thing. But the real issue is going to be whether, in fact, the markets start to believe that inflation is solidly grounded, that the Fed is committed to keeping the inflation goal of 2%. We always describe this as anchored inflation expectations. That's key to not only getting good performance in terms of inflation, but good performance in terms of the economy. And the Fed actually, this has been something that's built up over the last 20 or so years. It's been very successful for the Fed. Sure. And indeed, now we're in a situation where we don't know how that's going to play out. And that may affect the way the Fed is making decisions because it doesn't want to look like it's weak and willing to cave in to a president who wants to lower rates. And that could be a part of the important factor. And that's more, to me, the big stakes.
And are you reassured at all in terms of how the market has treated those questions to date? In other words, long-term yields are not really blowing out to the upside. Market-based inflation expectations have been relatively steady. In other words, it doesn't seem like there's an alarm being sounded about either the way this Fed or the next chair will behave.
But that could change. I mean, this administration throws us a lot of wild surprises. I mean, we're living through wild and crazy times. It's exciting in a way, but also very nerve-wracking. And we just don't know. I think that your markets do turn on a dime when there's new information. And so we have to see not only who the new Fed chair pick, which to me is more important, is how the new Fed chair will act. So, there's always this debate, is somebody independent, not independent, whatever. The proof of the pudding is going to be when they actually are making the decisions. And they do have the protection of independence as long as the Supreme Court upholds that, and to see actually how they behave. When Fed chairs actually show that they're not serious about controlling inflation, bad things tend to happen. We call those inflation scares.